Namaskar traders, good evening. Tuesday evening, 13th of December 2022, 8 minutes past 8 p.m. And I think in today's discussion, we should start with the global markets first. US inflation data's improving, and so they're cheering with a big gap up from the S&P 500, more than 2% up, and almost 1.5% for the Dow Jones. 1% cut for the dollar index. However, gold and crude both have given a significant jump from yesterday's price. So the inhibition in terms of whether this support will hold or not for the S&P 500 is now confirmed. It has managed to hold pretty well, and we have a gap up. Back to previous highs. Weekly charts are doing really good to reverse the underlying trend. So bullishness back with a bang, with a big gap up, and which is getting reflected on the SGX, which is almost up 190 points, close to 18888. So expecting a decent open from the market tomorrow morning. We should take a look at the crude and gold one, especially gold actually. But as you can see, this is the NYMEX daily time frame, and we've gone through this correction, multi-legged correction, and we're getting this bounce back. It seems like it has the potential for a retest of its previous swing lows. So maybe a little bit of upsides, but you will be impressed to see the way gold has broken out in today's trade itself. This is the COMEX rate, $1832, and we have a breakout on our hands. And the gold per se has kind of rallied quite a bit over the last 6 weeks. Not much of an effect on the equity market because of this gain, but yes, I think after a very disappointing long-term downward correction, gold has finally managed probably close to a 50% retracement. Now, should we go back to our markets? Now, Nifty was a bounce back of a day. Let it open up. Yes, so it was a bounce back of a day. So yesterday that we discussed that if this low gets breached and all those is out of the picture, out of the hypothesis. Now, with today's close, we have a higher high, higher low on the daily time frame. Momentum is still slowing down, but short-term momentum is mildly picking up, which is fine, not a problem. And any kind of a movement expecting for the rest of the week, triggers will be today's high and today's low. Considering if we mirror the gap up that we see in SGX, then we would probably be opening somewhere here, which means that a retest of previous high close to the psychological 19K mark, talks of 19K will open up, and from a short-term point of view, the expectation of a short-term further drop or dip, I think we should negate it going forward. Now, if you take a look at the 75-minute time frame, which is this one, you would notice that the index did manage to create some kind of a range-bound activity here, which is around this area. And again, as I said, if we mirror the move of the SGX, we will be opening beyond this resistance. And if we slip, generally with such a big gap up, generally it tends to slip also. Then again, this area will act as short-term supports. It will be very difficult to act after you get such a gap up, especially on the long side. But we'll see how it opens up. So Nifty, so far so good, held well. Short-term trend has moved into an uptrend. Intermediate trend is struggling a little bit. I think after tomorrow's close, the charts over here will improve. Long-term charts anyways are well established on the upside. Bank Nifty, what can we say? Exceptional show of strength. Except AU Bank, I think all the banks within the Bank Nifty managed to post a pretty close, positive close on the upside. Thanks to PSU banks, the biggest sectoral gainer, almost up 4%. So Bank Nifty party continues. Yesterday, I think I did talk about ICICI Bank, and looking at ICICI Bank very closely for any kind of a breakout or breakdown after this sell-off. the stock has essentially created what we call as a rising wedge, maybe a bit of a flag. And so generally they open up on the downside, continuing the previous trend. But let's see, maybe after tomorrow's open, we'll have a distinct negation of this rising wedge and stock may find itself on the upside. HDFC Bank gave us a breakout, if you remember yesterday, and we spoke about the chances. If it is a failure, then by tomorrow this low should have been gone. But nothing of that such things have happened in today's trade. So I think everything looks fine. I think banks holding well, in fact showing strength. Nifty bouncing back, a few sectors participating. We'll take a look at the sectoral indices, and it seems like the uptrend should continue further up for the rest of this week. Now, amongst the sectoral indices, we would like to discuss three indices. Media, a very interesting setup on the daily time frame. What I can see is a nice uptrend which led to a trend reversal, goes through a short-term correction, and now a consolidation. I call these a decoy bars, and so any kind of a move above today's high should see some follow-through movement. Now, media, if you take a look at the niftyindices.com website and come to the fact sheet of media, then you'll find that Z PVR together almost makes up 50%. Another 11%, that is 61%, will come if we add Sun TV, and another 9%. So that's 50, 60, almost 70% from these four stocks: Z, PVR, Sun TV, and Inox. So if we go to the group that I have here, Z happens to have the maximum weightage, has created an outside bar today. See this? There's an outside bar, and it has created a range bound behavior here. Weekly charts are okayish, no big deal. It's just kind of getting into a coil for a breakout. I like the way Heikanashi has played out so far. Momentum is not supportive in either time frame. So make or break, and we can clearly use today's high and probably a little below today's low. A close beyond this area, I think Z would give us some next directional clarity. Seems like momentum, however, is suggesting a downward move. So we'll see. Today the stock was down. Amongst the other which matters to the pack, if you take a look at TV18, not bad. TV18 is also a decoy bar. Momentum is slowing down. TV18's weekly charts are not that good. It's probably a turnaround story, and we need a move. We can use today's high, a move above today's high. Seems like it will open up further headroom towards 42.5, 43. So I would say Z, being the biggest, highest weightage candidate, definitely moves the sector. So look at a move beyond today's high low for Z. Look at a move beyond today's high TV18 for any kind of further upsides, which leaves us with the other two, which is Inox and PVR. Inox is a better weekly chart. Inox is definitely a far better weekly chart. Daily charts are also not that bad. I have a decoy bar, so a break above today's high can also lead to further upsides. And finally, PVR, you can see very clearly it's a coil, which we call an ascending triangular. With such little data, which I think just 6 bars, we can easily call it a pennant. In these kind of continuation patterns, momentum definitely always slows down. Weekly charts are fine, so a breakout. So of these four names, barring Z, which can open up on the downside as well as on the upside, but media, CNX media per se looks like an possible breakout on the upside. Others, Inox, PVR and TV18, are all poised for an upside breakout. The only problem is tomorrow if we gap up and all these stocks gaps up, then should we chase or not? Let's see, we'll see that tomorrow. Now going back to the sectoral indices, another sectoral index which looks interesting is the CNX Energy. Now energy went through a multi-legged correction, 1, 2, 3. Took a breather yesterday, and today a small bodied candle, and that's why my range indicators is suggesting that a sharp move is on the cards. Now this is primarily, this reflection of CNX Energy is primarily because of one stock, which is Reliance Industries. If we take a look at Reliance Industries, I think Reliance will definitely give us a bounce back soon. Today's high is on the cash market is 26.33, so a move above today's high. Again, the gap up can impact tomorrow. Over here also I have a bit of range contraction, so a bounce back candidate, and this bounce back on the 75-minute time frame, if you see, will give us a breakout from here, and couple of hurdles is over here and this one. So 2680 and 2660 from a very short term point of view, because we're looking at 75-minute time frame, which means 50% of this fall should get retraced for Reliance. That's, I think, enough for the Nifty to manage a move towards 19k. Not bad. So Reliance amongst the top stocks can definitely perform. And finally, metals. Now metals, I think I have discussed looking at the comparative charts recently. Weekly charts are very good, daily charts are just consolidating. I have a decoy bar here, and again a move above today's high can lead to further upsides. Now what we just saw in media and energy and metals, now media does not have too much of a weightage in the overall Nifty, but if this prospective bullishness in metals, energy, Reliance, metal names like Tata Steel, etc. plays out, then that's not bad at all for the Nifty. Because if you take a look at Nifty over the last 8-day slide that we looked at yesterday's analysis, has fallen for almost 3%, right? So we need to recover this, and these sectors and these stocks can definitely help, because see, it's a fact that we are on the 11th positive week on the bank Nifty, and if you've been following me and my work and my videos, I've been shying off from the banks. I've been shying off from going long in the banks because of the extent of the stretch, because of the way SBI is still playing out. So I kind of decided not to enter this pack either from a long or a short point of view. Still, SBI looks like a candidate which is clearly slowing down its underlying momentum for sure, as the stock is going up. So that's why I think that this sectoral analysis, this sectoral clue that we get from metals, energy, media and the others will actually help the Nifty for the bank Nifty to cool off a little bit and create some headrooms, right? So that's not bad for the overall health of the market. FIIs were marginal buyers, I believe, 619 crores, not much. In fact, DII2 bought to the tune of 36 crores only. So small numbers this month so far, either on the on the buying side or on the selling side. But overall, I think I should go back to where I started today's discussion. That is, the global markets are still holding well. SGX is up 160 points, looking for a gap up tomorrow morning. If all holds well, then index should show the strength to scale back to that psychological 19k mark. So with that, I think I'm good to wrap up today's discussion. Take care of yourselves, trade well and trade wise.